All right, guys, here we go. Thursday, December 15th. And this video, we're going to cover the micro futures of the S&P 500 and the Dow Jones. And the first chart I have up here is the micro E-mini S&P 500 chart. And people are asking again, how were we able to pick almost to the penny the exact location to go short the S&P 500 and the Dow? Well, nothing crashes overnight or instantly. Okay, there's always hints, red flags, indications, factors that lead up to that big pullback and crash, whatever you want to call it. And on the S&P 500, as price came up, we had this big push to the upside on the numbers the other day. And as you can see, when we came, the trick was as we came back under that red dash line, and everything you want to know about the chart is over here on the left-hand side. I'll just, that's one of the hints, okay? We had a high pivot here, which was what? Previous resistance. And then even before that, we had support and then support consolidation right here, breakout, hit the 200, came down, a little bit of support until it wasn't. We retested. So we knew that was going to be a very powerful price level should we get back under it. Now, this was obviously institutional big money selling off the market. It wasn't necessarily, you and I, mom and pops out here taking profits or getting scared out of the market. And then the next day, we had this red candle where the blue arrow is closing under the 200. So that was another factor. So if you get two or more factors, that gives you an 83 to 87% odd probability that price is going to continue the way it's set up, on the chart to pull lower. Okay. So then, obviously right now we're under the 20 and this long-term uptrend line. And then, as price came up, it kind of backtrack a step or two. When price came up and over this resistance zone, there were a lot of, retail people here instead of waiting for confirmation for the candle to close. They wanted to tag in, real quickly, thinking that the market at this point in time would be up here, testing this high a lot, a lot higher price action. So anyway, with all those people waking up and realizing all that was sold off, it accelerates the downtrend. Okay, so we knew this was going to be a powerful move because of that type of trading. Now let's look at the Dow. Okay, and we made a high, lower high sell-off candle. Then the next day, you had a candle that took out that previous candle. And then, as you can see from this high pivot going back to August, always look left. We started trading under it. And that was kind of the trigger to say, hey, because of that big sell off candle, we're going to get acceleration, which we have gotten, as you can see. Now, what's nice about these micro futures is that, yeah, let's say your 401k, 203b, Roth IRA, et cetera, is kind of locked in to the accounts, the mutual funds or ETFs, whatever you may have, and you're watching the market come down. And how do you hedge against that? Well, like I've mentioned before, every major company, industry, institution that works with any sort of commodity, they hedge their price by hedging the futures market. So why can't you? Well, you can actually with micro futures hedge your bet if the market's pulling back instead of sitting there, watching, your account, your retirement account or whatever lose 10, 15, 20%, whatever it may be, you can hedge that with micro futures. And if it goes down, you can kind of balance that out if that makes sense. And that's what, the institutions do, Wall Street does and everything. They want you to dollar cost average, buy the dip, as things are coming down in order to keep that their systems going in order to keep money, flowing into their accounts. But behind closed doors, guess what? They're hedging their bets. If it's going down, they're going short. If it's going up, they're going long. Okay, enough of that, Irad. Okay, guys, thanks so much for watching. Give us a follow on Twitter. Check out our Patreon members group. And then in the link below and description in the comments, I'll leave the link to our introduction to micro futures. It's like 20 plus chapters of all the ins and outs. And then half of that actually is some of what I've talked about. There's, many more chapters about, scaling and scaling out, your support, how to set up your stop losses, et cetera, et cetera. But in the meantime, we will see you on the chart.